everyone, John Henry here, slingshotfutures.com, and welcome back to the daily market outlook on futures and forex for February 1st, 2017. This is going to be trading for tomorrow's session. Now, what the daily market outlook on the futures and forex is looking to do is create a plan for our big six markets. We have 3 on the futures side of things and 3 on the forex side of things. We've got gold, crude, and the Dow for futures, and the euro, the pound, and the yen for the forex. And really all we're looking to do is kind of put together a game plan so we can be as prepared as possible for tomorrow's price action. So first up on the docket, we have gold rolling with a pretty big move to the upside overall, kicking things off with a nice bullish tone and really not giving up at all. Really nice, just bullishness all over the place. We started in the early morning session with a nice rally to the upside. It looked like they were going to try to get a full reversal, but they failed to get down to a new low, and that failure to get down to a new low was met with massive buying pressure on the way up. Had a small little pullback, barely anything, and then another ram right back up to the highs again. So with that big push to the upside, we're now expecting the market to do, one of two things. First of all, we're in a range and we're transitioning into a range while the buyers and sellers kind of figure out, whoa, what happened? Now, while we're inside this range, one of two things is likely to occur. We do have a bullish bias, so a bull breakout of this is much more likely. The probability of a bull breakout versus a bear reversal is much higher. Now, because of that, what I would really like to see is the bears attempt to get a breakout to the downside. Because it's a low probability situation, if we see them try to break out and fail, we know that that's going to trap a lot of sellers in the move that, once they start popping back up above that low, they're going to realize really quick they might have messed up, and then you expect to see a rally back towards the highs. Now, the major upside objective, one of them was hit at 16.9, and that may be good enough. But if we do get that trap on the lows and another rally up, I'm looking for 18.3 and possibly even further to 23.2, right above that prior week's high. Now, those are the major upside targets. And again, what I would really like to see here is for the sellers to try to take it lower, dip underneath that low at 10.6, find a trap, and immediately reverse right back up. Then we can use that as support and push it back towards the high. So looking to buy on gold, but preferably with a trap low, just so we can get the juices going pretty easily. Over on crude oil, we have a big run higher, and then it completely fell apart. Now, we started off the morning session with a slight bear tone. Not really a whole lot to write home about. A little bit of, downward pressure, but you can see them starting to weaken out, forming those low buys into a higher low, right? After that form, though, it's just open the hatches. That thing ran like crazy to the upside and just took off. Now, that big rally to the upside, most of that happened in the earlier morning session around 9 o'clock to, 11 or so. But after that high was put in, it had a really hard time continuing up. We made a lower high, reversed down again, lower high, reversed down again, and everybody gave up underneath that low and just slammed to the downside. Now, the earlier area where we found a huge amount of buying inventory came in between 52.98 to 53.09. And now that we've broken through that pretty decisively, what I would like to see is the market to come back to that area once support turn resistance and look for selling pressure off of it to shove the market back lower. You'll notice we do also have a wedge drawn in here, and that wedge is attempting to break down on the API report, which just came out. That may kickstart things a little bit early, but overall, I would still rather sell high, if possible, in this area. Again, 98 to 09, but you may not have a choice. You might have to get a little aggressive and sell sooner rather than later if the market doesn't give you that retracement that you're looking for. So looking to sell, maybe have to be a little more aggressive if we're not given a choice. Over on the Dow had a relatively range-bound morning, slight bearish tone after we gave up the move at around 10 o'clock last night. They tried getting a grind higher, completely fell apart, found major support along that 828 area, put in a triple bottom, failed to go higher, and then collapsed back underneath it. Now, like we were just talking about, once support turns into resistance, and we now just to the tick tested that 19,828 area. So this is the location that you expect sellers to start piling in, assuming that any breakout above that 828 is going to fail initially. Now, it may be able to stick if it keeps going, but right now, the way that it's looking, it may turn off, maybe even head fake above to trap in some buyers, and then collapse back down to the lows. That all said, right, although I would love to be a seller at that 828 area, this bullish rally is no joke. This is a very strong bull run higher, and I don't really want to be the first one to the party to step in front of this freight train to the upside. So generally what's better is to wait for the sellers to prove they want to come in, try to come up, form a lower high, and then turn down again. That's what we had back here. That adds a little bit of proof to the downside that you may need to get that drive going towards the lows, especially if they're going to break through this once turned resistance into support area between 777 to 789. So sometimes when you have to wait for that little bit of later entry, you pay for it because, well, you get a worse entry most of the time, but that's kind of the cost of that extra information. Now, if we do want to see the market going a little bit higher, we do have an area of falling resistance that could be coming into play. Arguably, depending on how aggressive the sellers are, they may have used this one right here. Notice how that kind of stacks up along that area, and that puts resistance all in the same place. So looking for selling up here for sure. If you're a scale-in type seller, you may be able to get a couple positions on the way up. Ultimately, though, looking for a head fake above 828 and then continuation to the downside. If we fail to break underneath 777 to 789, then we may be looking for a quick bounce right back up, and that may kick off a move all the way back to a new high. So kind of neutral in stance, both buy and sell, with a slight sell bias up here. Now, over on the Forex markets, the euro had a beautiful run to the upside, big push higher, little bit of a kind of a wedge formation inside here, and that wedge broke out aggressively. A very decisive breakout to the upside, shallow pullback, and another hammer to the upside. So lots of buying pressure on this run higher. And when they started trying to pull back, they trapped underneath those lows, and they pushed right back higher. So what I would like to see is after that trap is formed, see the market come back, and let the buyers prove, do they still want this pullback? They were so interested right here, but they couldn't make it to a new high. So if they hold this once again and kind of do a little skip off of that level, we may be able to pick up a nice quick little pullback for a run back up to finish off the major objective, which is at this 81-87 area above us. So looking to be a buyer, but not right now. I would much rather buy a deeper pullback to retest that earlier area of support. And if it does end up collapsing, then you're looking to use it as resistance for a possible push down back towards that 750 area. So looking to buy at the moment, but on a better pullback, and if it fails, then looking to switch gears and switch to the sell side. Over on the pound, again, another very strong move higher here. Big three push high on the move up. When they came back to retest that top, we ran into a little bit of trouble, and now we're starting to see the sellers try to take it back. One big thing that stands out, massive support between 55.57 to 56.57. That whole area is acting as a big chunk of support, and as long as that stays open, we still have upside ground to cover. We have the yesterday's high just above us at 26,004 and looking for possible head faking above that. Either way, that's the magnet right now, and look for the buyers to push up towards that area, maybe pop their head above it, and then from there we'll see. If they want to sell aggressively up there and push it down, that's a possibility, and if that is the case, you use that support turned resistance to sell it on the way back lower. So looking to be a buyer, but again, just like the euro, I would rather see a better pullback to buy into just to get some better pricing and a smaller stop. And then finally, over on the yen, relatively more range bound. Not the best looking thing in terms of trending environments. We started off the day with a range. We broke out of that range, came back, retested the highs of the range as resistance. That put in a huge amount of inventory between the 324, 113, 324 to 175 area. And we can see that area has been a big level the entire day. So the fact that we've held that location so many times, if we can poke our heads back into that location, even a little pop above 324, I'm looking to sell and drop the market back down to at least rising support, maybe a little bit further if they want to get it going. The one thing that has me concerned about a big push down to a new low is simply that this was an aggressive move lower, and it was met with an aggressive buy move higher. So the sellers were obviously interested off of this area, but without enough ambition to follow it up with another leg lower. I mean, this may all just be that leg, but they're taking their sweet time, that's for sure. So if this is going to be the second leg and it never makes it back up to that 175 to 324 area, we should see a strong breakdown, probably some bouncing along rising support, and then ultimately a breakdown to sell into for that move back down. Either way, looking to sell, but preferably at a better price. Sometimes the market doesn't give you that choice, though. So that's going to do it for the outlook on futures and Forex for trading on February 1st. If you have any questions about it, you can always send me an email, jbrink@slingshotfutures.com. Like we always say, make a plan, trade that plan, follow your rules, and you will be A-OK. Until tomorrow, have a good one.